webinar, How to Save Money on Your Mortgage. I'm your host, Priscilla Harding, and I'm joined here by two of our top home loan advisors, Kate McGree and Phil Lipinski. So today we're going to be going over a couple of the benefits of refinancing with Hall Financial. At the end, we'll answer a couple of questions from questions that were previously submitted, and you can also submit questions through the chat feature as well. So to kick us off, Phil, would you like to go over a high-level overview of refinancing with Hall Financial?
Absolutely. Thanks, Priscilla. Thanks, everybody, for jumping on. This is one of the things with Hall Financial that we are super passionate about, is helping educate consumers and help walking people through a process of getting a mortgage. From what we find, a lot of times people won't look to refinance, or they won't refinance in general, because it seems like a lot of paperwork. It seems very daunting. They don't know if it makes sense. They don't know what exactly they need to do. How do the numbers work? So this is something that we wanted to put on to help people better understand and kind of help them figure out, does it make sense? What are the common reasons people will refinance? And here at Hall Financial, with refinancing, we like to make the process as easy as possible. We never want it to be somebody decides not to save money on their mortgage because of those reasons, because the paperwork is hefty. They don't know if the numbers work. That's why we kind of are always talking about in our office and with our clients of getting a 5-minute mortgage review. It's something that all of our home loan advisors are trained to do. They're experts of looking at someone's situation, determining if a refinance would make sense or not. And if it does, helping them walk through that process very easily, closing quickly, and making it very painless. Our process is a little bit different than most. So essentially for us, it starts with having that 5-minute mortgage review, going over a client's goals, their current situation. And then at that point, if we feel there might be a benefit and the clients believe there might be as well, it's typically getting a couple documents, maybe pulling up a credit report, and really securing some of those benefits in the refinance and going over different options. And then at that point, if everything makes sense and a client wanted to move forward, what we do is a little bit different at that point in time. We would get their loan into underwriting. And most of our loans right now on refinances specifically, close to about 70-75% don't even need a home appraisal. So that's something that upfront, once we're ready to move forward, but then at that point in time, what we do is get the loan over to the underwriters to kind of start their initial review. But we also order the title work at the exact same time. So we're kind of going down two streets. We're getting those two things done simultaneously. We're not going to go through the underwriting process, then worry about ordering the title work. We like to do everything right at the very beginning, makes it very seamless. And that's why on average, we're closing 90% of our loans in well under 20 business days. Majority of our loans are closing in 3 to 4 weeks, including weekends and holidays. So we just like to make it very simple. So, and with us too, obviously giving a 5-star experience. This is on all of our advertisements. I'm sure some of you that have joined have seen this, but that's just truly what we're about. So our process with a refinance, you have 2 people that you're interacting with. That's your home loan advisor. They reviewed your goals. They walked you through all of the numbers, had you sign some of the mortgage disclosures and walk you through what those mean, answer your questions. And then at that point in time, we have a client experience ambassador that also gets involved. So you really have only 2 people that are helping you walk through the process. We never want somebody to feel like a number. So you have 2 main people to go to, walk through the refinance, get everything closed. And in some situations, we'll even send a notary out to your home to close your loan. So we have people that don't even leave their house at any point during the process. They send their documents with a picture, they can upload them securely. So we're all about making it super seamless, giving somebody a great experience. And now Kate's going to go into some of the reasons why most of our clients do refinance, why somebody would want to do this, or what people bring up and why they want to look into it.
Thanks, Bill. So yeah, I'll dive into some of those reasons. So, I mean, there are a lot of benefits right now, especially in this market, to refinance. So, it just all depends on what your goals are, whether that's to save more money monthly, whether that's to save more money long-term, by shortening the length of your term, whether that's to change the loan program that you're in or tap into the equity that you have in your home. So I'm going to kind of dig into a lot more in detail about each of these benefits. So I'd say the biggest benefits right now is the low interest rates. So interest rates in the mortgage industry are the lowest that they've ever been. And now is the best time to take advantage. So we've had so many clients that are paying interest rates, in the mid to high threes, all the way up to 7%, sometimes even higher. So we've been able to help refinance those clients and get them interest rates in the 2s and 3s, depending on what term length they do and what their situation is, which saves them a ton of money monthly. It can save you a ton of money monthly. Now, this gives people extra cash flow savings each month to put towards, groceries, gas, other bills they might have, to pay off some credit cards they might have, things like that. Whatever you want to do with that monthly savings, you can choose what you want to do with that. All of our interest rates right now are fixed, so you don't have to worry about the rates fluctuating or changing at any time. I know we've refinanced a lot of people that have a variable rate right now, so that's another big benefit. And then when refinancing, what a lot of people don't know is you're able to skip 1 or 2 mortgage payments, so that puts even more money in your pocket now, and you get a refund check from your escrow account. So whatever's left in your escrow account, you're going to get a check in the mail. And then if you do a regular refinance, not taking any equity out of your home, you can actually get up to $2,000 called incidental cash back. So we could go into more detail with you about that, but those are just some of the benefits of, not only lowering your interest rate, but what that can do on a monthly basis. So another big benefit that I want to dive into is changing the length of your term. So again, depending on what your goals are, we've had a lot of clients extend their term back to a 30-year, which again, that brings in a lot more cash flow monthly for them to put into, other monthly debts that they might have. We've had clients shorten the length of their term, which saves them thousands of dollars in interest over the life of their loan. And, they can shorten their term and lower their interest rate. So it's kind of like a double benefit there. I've had clients do that and they pay a little bit more each month in order to do that, but they end up saving thousands in interest. I've had clients do that where their payment actually stays almost the same. So they shave off years and then they're essentially paying what they pay right now. But again, they're going to end up saving a ton in interest. And then I've even had people shave off a few years and their payment is even still lower just because they had a super high interest rate on their current loan. So a lot of benefits of changing your term length. We even do flex terms. So we do anywhere from 8 years all the way up to 30 years and everything in between. So we do a 16-year, a 17-year, an 18-year, 21-year. So I've had clients keep their term length the exact same and then just lower their interest rate, which again saves them more money monthly.
Yeah, to jump in on that real quick, Kate, too. So from my experience in just working with a lot of clients too, the flex term that we can do, so a 17-year, a 22-year, an 8-year mortgage, it really is something that not a lot of people know about. And I would say one of the biggest misconceptions that people have with refinancing is that if I refinance, I have to start over. So I'm going to have to do a new 30-year fixed, and more interest per month is going to be paid. The amount of principal per month is going to go down, all because I'm refinancing to save a little bit of money. And not a lot of people want to do that. So to your point, we have a lot of people, I've had a lot of clients that have 27 years left on their mortgage. They want that lower interest rate and it makes sense to get that lower rate, but they don't want to add that extra 3 years and kind of erase some of the amount of principal that they have paid down by extending it out another additional 3 years. So I have a lot of clients that would do a 27-year mortgage. And to your point, maybe they pay extra at some point because their payment's probably going to go down, but they also save a lot in interest in the long run because they don't have to go extend it out for another 30 years. So that really helps. I also had another client a couple of weeks ago that wanted to retire in 9 years. That was their goal. They want to retire in exactly 9 years. They worked at one of the big three for a very long time, and they want a 9-year fixed. So that was something that we were able to accommodate, where a lot of other companies can't, We structured it so in 9 years, their mortgage is completely paid off. That was very impactful for them on their retirement. They didn't want to have to retire where their income's probably going to drop and still have that mortgage sitting around. So they wanted to do that, get it paid off.
Awesome. Thanks, Phil. So another benefit I want to dive into is we've had a lot of clients that have refinanced and they've been able to either get rid of their PMI, private mortgage insurance, or greatly reduce it. So, you know, when someone has less than 20% equity in their home, that's when they pay PMI, private mortgage insurance. And because home values have increased so much in the past few years, it makes it possible for someone to either reduce it or completely get rid of it by refinancing. So for example, you know, we work with a lot of we have exclusive relationships with a lot of PMI companies, which is why a lot of times we're able to reduce the PMI that someone pays. So say someone bought a house, you know, in 2020 and put 5% for a down payment, and then they come to us wanting to refinance. Maybe we can't completely get rid of the PMI, but we're going to still reduce their monthly payment by reducing how much PMI they're paying. So, you know, if they're paying like $150 a month right now for PMI, and we refinance and get them down to 40 to 50 bucks a month or PMI, whatever the situation is. But we've done that for a lot of clients as well. And then we've even been able to clients who first bought a home and were put into an FHA mortgage, we've been able to refinance them into a conventional mortgage, which goes to my previous point. If you go to a conventional loan, you have the opportunity to eventually get rid of your PMI or get rid of it altogether when you refinance. And then the last benefit I really wanted to dig into now, this is probably the biggest one we've seen this past year, is people being able to tap into the equity in their home. So the average home in America in 2020 picked up over $20,000 in equity. And over the last 4 to 5 years, there has been substantial growth in home equity throughout the whole country. So this is a great time to do different things. You know, you can consolidate high interest credit card debts. You can pay off student loans. I know a lot of people are taking out equity to do home improvements. So I've had a lot of people say they want to remodel their kitchen, they want to remodel their bathrooms, they want to put a new roof on, they want to, you know, put new windows in, you know, whatever your goals are. Some clients take out equity to help with a down payment. If they want to buy a second home up north and they don't have the cash right now for a down payment, you can take out equity in your home and use that cash to put on a down payment on a second home. I've had people, you know, who invest in the stock market, they take out equity in their home and put that into investments because they think, you know, they realize that they're going to get a greater return there than just letting the equity sit in their home. So, you know, whatever you want to do with the equity that you've built in your home, it's your money. So, you know, you can take it and do whatever you want with it, essentially. So those are just some of the major benefits that we've seen this past year, you know, especially in this low interest rate market. That we could definitely, we'd love to, like Phil said earlier, do a 5-minute mortgage review and just see if it's something that would make sense for you.
Yeah, and one of the things to kind of piggyback on that, Kate, is with the cash out, one of the things I love going over with people is roughly today on a mortgage with how low interest rates are, every $1,000 that you can get back in cash at the closing table, $1,000 is only about $4 to $5 per month on your mortgage payment. So there's a lot of times where people will come in wanting to consolidate some debt. They'll want to do a home renovation and we can get them 20,000, for example, and their payment only increases by $90, $95 a month, maybe $100, depending on the exact situation. But you can get a lot of money out of your home to do those things that you desperately want to do with paying off high interest rate credit cards at 12, 18, 24% I saw recently. So you can get that money and it's not going to drastically raise your payment, which is a question that Kate and myself and the other home loan advisors get a lot, is if I do take money out, is my payment going to go up a lot? Am I going to have to pay a lot more monthly? And it kind of deters a lot of people from probably looking into it. So I want to make sure everybody knows that a couple dollars a month can really help you get that cash out that you desperately need.
Great. Thank you both so much for touching on the benefits of refinancing. They all sound fantastic. And then now, before we get into questions from our chat and previously submitted questions, why don't we get a client success story from each of you, just about a recent refinance success?
Yeah, so I'll start us off. So I actually had someone call in who was a neighbor to an older gentleman. So she had actually gone over to his house and was talking to him. And he just said out loud to her, he's talking about all of his monthly debts. And he said, my mortgage payment, it seems like it's really high. So he dug out his mortgage statement and she took a look at it for him. And it turns out he was actually paying 5.25% in an interest rate on his mortgage, and his monthly payment was close to $900 a month. And he's retired. He only gets Social Security income, so it's not a ton of income per month. He had medical bills to take care of. He had other credit card debts to take care of. So it was just really weighing down on him for a really long time. So they gave me a call. I dug into it and we ended up refinancing and got him at a 2.99% at that time. And he ended up, his payment now is a little over $500 a month. So he's essentially saving almost $400 every single month, which it made a huge difference for him because again, he doesn't get a ton of monthly income. So he was so happy. And it's just because she had gone over that day and they were just talking about it. She's like, let me see your mortgage statement. And his interest rate was just crazy. So we did that for him within 3 weeks. She helped him to gather all the documents. It was a super easy process. And I mean, it turned out great. It was a great experience. And she actually ended up, after that, referring her husband to us. And we did a refinance for him. And he took some equity out of his home for home improvements. We were able to give him about $20,000 cash out to do some home improvements. So it was a great experience. And to Phil's point earlier, when he gave the overview of Hall Financial, this is the reason why we're so passionate here, because of situations like this, where we're able to make a huge difference in somebody's life. So, I mean, that's just one example, but we've had, numerous examples of that just within the past year and beyond. So that was a really great experience.
Yeah, so for me, I just had a client recently. So obviously in Michigan here, we only really get a couple prime time months of weather. So I had a client a couple weeks ago that wanted to take cash out to build a pool in the backyard. There's a couple options when it comes to a pool. Some of those companies allow financing. And in this case, this client got a quote to finance the pool, and it was something at 11.5% or 12%. So they reached out to us to see if getting cash out was a possibility, adding it to their mortgage. And we ended up being able to not only get them the $50,000 to build the pool in the backyard, but we also dropped their interest rate. Currently, they're at a 4.5. We were able to do it, get them closer to a 3%, get $50,000 out. And like we went over before, their mortgage payment only increased about $80 per month because their rate went down, because they were getting the money out of their mortgage. Didn't increase a whole lot. And right now, just like a lot of people across the country, they've been spending a lot of time at home. Two working parents, both working from home. So they're going to be able to build that pool here in the next couple months. It didn't really drastically change their monthly bills. So they made a decision to go ahead and move forward. And kind of the cherry on top was, like we spoke about with appraisals, we can actually get them those funds out. They didn't even need an appraisal. So they didn't have to have the hassle of somebody coming out to the home, paying money out of pocket to get that done. So they were able to, from start to finish, got me their documentation needed. They were closing within 2 weeks. They were done. Now they have the cash in hand, called the pool company, and they're looking to start that construction here in the next couple of weeks.
Thank you both for sharing those client success stories. So we will now transition to the last part of our webinar, which will be our Q&A. So we'll answer questions from the chat and also go over a couple of our previously submitted questions. So the first question is, what is a common myth about refinancing you'd like to educate consumers on?
Yeah, so I'll go real quick. I would say on that, and we went over some of these just with the biggest myths, I would say probably the top two is, number one, that it's very expensive to do, because you hear a lot about closing costs and fees. And I've never had anybody call that loves paying high fees and loves paying high closing costs. It just hasn't happened. So one of the biggest misconceptions, because in all reality, refinancing, most of our loans don't need an appraisal. You have your standard title work, the underwriting fees, those couple minimal things. But on average, we're talking $3,500, $4,000, sometimes lower, sometimes more, that gets rolled into your mortgage. And a lot of times you're going to make that up very, very quickly. And that's something we educate our clients on, is what is your break-even point of doing this? So if you're going to invest those closing costs, when do you see that benefit? How much are you saving? how quickly do you recoup that? So that would probably be number one, is that it's very expensive. Number two is that it's very hefty on the documentation and it takes a very long time. We're going to be asking you for a whole lot of documents. In reality, for most people, it's 5 to 6 documents that we need, maybe 1 or 2 more during the process, easy things. You can e-sign documents electronically. We send a notary to your home in most cases on a refinance, or you can come up to the title company, do a drive-by closing, is something we've been doing a lot of. So it's very an easy and streamlined process. And again, most of our loans, majority of them closing 14 business days, 12, sometimes 8, sometimes 17, but right around 3 weeks or so on average, and then you're completely done with the refinance. So it's actually a lot quicker than a lot of people think.
And I just add in there too, real quick. So those are the 2 I was going to say as well, but just want to add in, sometimes people think if they have a rate in the 3s already, even if it's mid 3s to high 3s, that it's not worth it to refinance. But, you know, going back to the benefits we went over, I mean, sometimes it can make a huge difference in your monthly payment, or shortening your term, and or being able to tap into that equity in your home. So I'd say that's another, you know, misconception. If they just, you know, see their rates 3.5 or whatever it is, oh yeah, I don't need to refinance, but there's a lot more you can do with refinancing. So
Thank you, guys. So the next question is, are there any penalties for an early payoff?
Yeah, that's a great question. And I appreciate all the questions too. I know we're probably not going to get to them all. There was a lot of them submitted. A couple came here in the chat. So really appreciate the questions. So in early payoff, Hall Financial currently doesn't have any prepayment penalties. We know that life happens. So I always kind of joke with our clients, if you refinance today and in 6 months you hit the lottery, pay your mortgage off if you like to. There's no penalties. We're not going to be calling you, asking you to pay a fee. There's absolutely no prepayment penalties, which is also why I see a lot of people stick with doing a 20 or 30, 25-year fix, maybe even, because they just want to have the flexibility and they want to pay it extra and pay more per month when they want to.
yeah, that's what I was going to say, to add on to Phil's point too. If you opt for a 30-year, you can make extra payments every single month, and you're not going to get penalized for that. So that way, you know, if an emergency or something pops up, you can resort to that low monthly payment on the 30-year.
Thank you, guys. We probably have time for about 2 or 3 more questions. So this one says, what advice do you have in order to manage your money better?
Yeah, I'll go first. Sorry, I keep going first, Kate. So I would say with money management, I mean, I think you're in the right place. If you're watching this, the biggest problem for most people that we see, and obviously we're not financial advisors, but being a home loan advisor and being licensed to do mortgages, I would say one of the biggest things that we see is people not being in the correct spot with their mortgage. So they end up buying too much house, their mortgage payment goes up, it's way more expensive than they thought it was going to be, because you have to keep in mind the other expenses of owning a home. So I always recommend to people, especially when we're helping them get pre-approved, don't get into a situation where you call us and refinancing is a dire need. So a lot of times people just buy too much house, and the mortgage is really, for most people, it's your largest financial investment. So making sure that you're in a good spot with that is super important. That's why we love the 5-minute mortgage review and checking in on these things, because we've had so many people that we save money on a monthly basis on their mortgage. It helps them skyrocket to use it to pay off other debts, helps them build their savings. I've had clients that's helped them save an extra $500 a month for retirement in 15 years, add to their portfolio. So the mortgage to me is one of the most important things, because it is your largest bill, it's your largest investment.
Yeah, I think, I think Phil pretty much covered it. I mean, that's what I would say too, is just, you know, if you're not sure, call in for a 5-minute mortgage review and we can run through the different scenarios with you about, hey, does it make more sense to combine some other debts that you might have, you know, like high interest rate credit cards that you really don't need to be, you know, paying on, you know, things like that. So I'd say just, we can go through all those different scenarios with you.
All right, perfect. Next question is, what kind of interest rates are you still seeing? And is it worth it to wait until interest rates drop again to refinance?
So right now, I mean, depending on the term you do, we've seen rates, you know, in the low 3s for one of the longer terms, and then all the way down to the low 2s if you go for a really short term. So it really just depends on your situation. And something we like to do as home loan advisors is run a few different scenarios for you. So if you're not sure what term length you want to do and you're not sure what the best rate is right now, we could run a 15-year and a 30-year and look at the different interest rates, and depending on what your goals are, what makes more sense for you. But yeah, that's typically what they are right now. And my advice would be not to wait, just because we never know when rates are going to go up, and they're at the lowest they've ever been. They've started to go up slightly, these past couple months already, but they're still in a really good spot. So this is the best time to, like we keep saying, call in, do a 5-minute mortgage review, and we can really see what makes the most sense for you.
Great, thanks. And so this will be our last question of the webinar. So this one says, how, and you guys already touched on this a little bit, but it says, how can I take advantage of the equity in my home?
Yeah, so taking that cash out, if you have equity that's built up, and as Kate mentioned, average consumer about 20,000 in equity. Home values, I'm sure everybody probably on here has friends or family that are looking to purchase a home or in the housing market. Things are pretty crazy right now with property values. So now is the time. And with a mortgage, we cannot put somebody in a position where you use all of your equity. So that's something that I want people to understand too, is when we talk about taking cash out, you're not going to be put in a position physically, we cannot do a loan for you where you're in a very bad situation where you only have a couple $1,000s worth of equity. It's not possible. So use the equity now while you have it. You're still going to be in a very equity rich position in the future, but you can borrow it at such low interest rates, pay off some other debts, use it for other things as we kind of went over. So that's one of the biggest things that we're passionate about, is helping people when it makes sense. Of course, everybody has a different reason. So you need to kind of be the one to determine, should I take the money out or not? But we're here to help guide you, understand the numbers, and ultimately put you in the best situation if you do decide to take money out.
All right, perfect. Well, that wraps us up here. Thank you, Kate and Phil, so much for taking the time out of your days to attend this webinar and help our future clients understand what the benefits are to refinancing, especially with Hall Financial. Of course, thank you to our attendees for taking the time out of their days to attend and listen to why our home loan advisors and our entire company here at Hall Financial is so passionate about helping our clients refinance, giving them more personal attention, earning 5-star reviews, and helping them change their lives. So thank you all again for attending. And of course, to get your free 5-minute mortgage review, you can go to davidhallmortgage.com, or you can respond directly to your webinar invitation that you responded to, and you can just reply there, and we'd be happy to answer any of your questions and get you started. So thank you all again.